So, good morning, active traders, and welcome to our first Trading Week Ahead broadcast of the year here on New Year's Day, January 1st, 2022. Yay! Let's make some money this year. I did over $23 million worth of trades last year. Not profits, or else why would I run a business? But I got $23 million worth of action in, so I've got a ton of experience. As my most active year of my life was this past year, thousands and thousands and thousands of trades. So I'm a good guy to learn how to trade from, and I'll show my 1099 from Fidelity when they give it to me late January, early February as proof, so you can see. I'll screen cap it so you can see. Anyway, before we get started, just a gentle reminder, I do have the special of the live room access for the month of January for just $97. I only offer that once every 2 or 3 years. It's been actually almost 4 years since I offered that, but anyway, it's just $97, and it does not turn into a subscription. It's just a one-off, kind of like an expanded trial, so you can get a whole month with me. And trust me, this will be a great month to trade the first month of the year. So you can see testimonials and examples and all that good stuff. So go to trademastery.com/New Year for that. And it's just $97. No upsells, no extras, no BS, just straight, honest, good professional quality training for the whole month of January. A whole month of mornings, right? I'm there from 8:30 till 11 daily, and usually in the afternoon too, from 3:30 to 4. So anyway, lots of training for just $97. Such a deal. Good way to start off the new year. So do bookmark that page, trademastery.com/New Year. Okay, with that, let's go ahead and get underway with our session today. You can see, let me open this up here for you. This is what I call a bearish overhang. A bearish overhang, because the market ran up, but its buyers are running out of steam, and you see some very small candles. It was a very choppy week last week, right? It was tough to trade last week, all things considered, because the ranges of the market were really choppy. I don't know if you folks how many of you found it tough to trade last week? I found last week particularly challenging because range is everything as a trader. You may have seen my article in this month's issue of Technical Analysis of Stocks and Commodities called Range-Based Day Trading. Big ranges we like. Little tiny ranges, not so much. Flat markets or choppy markets we don't like. We like big ranges, either up or down. I don't care if it's a very strong long or very strong short market, as long as there's range and directional volatility. The market's choppy as heck, very difficult to dig good trades out of it. So we'll take a look at some strategies for upcoming week ahead as well. Anyway, I'd use 48.20, well actually 48.10 is R1 resistance, and 47.50 is support, right under this previous shadow for maybe 40. It'd be specifically 48.20 is R1 and 47.40 is S1. So right under this candle low. If the market gets under there, watch out below. And if it gets up here, we may rally up to new highs. One thing to pay attention to, as always, is our SIBO volatility index. The VIX is currently down there 18. And we want to see if it, as long as the market stays up in the top part of its trading range, which it was last week, we want to keep a careful eye on the VIX. If the VIX gets over 20, then look for sell pressure in the market, right? Like we saw early December, the VIX spiked up right under 36. This week ahead, this past week, it's been really choppy, just in that 17, 18 chop range. If the VIX gets under 16, that would be bullish. Quick tip, I'm not going to initiate new swing trades in my capital trading accounts unless the VIX gets under 16. That's really important. I'm not going to trade right here because it's choppy. As a trader, you want to trade when you have an advantage, when you have an edge. Kind of like playing blackjack. If you got an 8-3, double it. If you got aces or eights, split them. If you got a 6, surrender. Anyway, the point is, know how to, and if you're playing hold'em, if you're late position with bullets or cowboys, may raise. If you're early position with the 7 deuce offsuit, you fold. Know the difference between signal and noise in the market. And one good way to do that is to use the volatility indicator, the VIX, as kind of a hallmark for bullish or bearish sentiment. The VIX is inversely correlated to the market. So if the VIX goes up, that's when the market's going down, and vice versa. If the VIX is down low, the market goes up. So I'm not going to initiate new swing trades. I like Ford and Pfizer, still my two favorites. I'm not going to trade swing trades in long stock positions unless the VIX gets under 16. I'm also not going to short the market unless the VIX gets back over 18 and preferably over 20. So those are key. Support in the VIX is 16, resistance is 20. It's kind of a wide band. 18 to 20 is a tighter range, but we want to go long the market if the VIX gets down to 16. We want to go short the market if it gets up there. A trader had asked about some rules for swing trading. In general, this kind of a 45-degree angle breakout, complete with large green candles, is a good sign. But we have what? Kind of shooting star, almost type bearish upper shadows here. So obviously we don't want to go long until it gets up above new highs. But this kind of pattern for visually as a swing trader, you're looking for 45-degree angle breakouts out of consolidation zones, or what I call an acceleration ramp. That's where you got a kind of a slow, steady grind up, and then it hockey sticks up like this. That's good for a swing trading entry up at new highs. I'd be more comfortable with that, though, if we had volume to correlate with that. We want to see high volume and high price action. When you have divergence, when you have declining volume like this and higher price, stay away. We don't want to trade it yet. We want to wait for volume to get back over, say, the 1 million, preferably over 1.5, 1.25 million, and above those upper shadows before we go long. So Yum Brands looks tasty up here. Parent company of Taco Bell. Make a run for the border. Ding. I love Taco Bell. I haven't eaten much this past year. Anyway, if it gets over 140, keep an eye on that. My favorite chart continues to be the Ford Motor Company. Pulled back earlier, but it's had a spectacular run. If you look on the 1-year chart, Ford's been a rock star. It's peaked at around 2150. So I'm going to wait for it to get over 22 before going long. So I'm going to trade Ford if it gets over 2220. But it ran up for the whole year. It consolidated this last 7-8 weeks. And now if it resumes its uptrend north of 22, Ford Motor Company is one of my favorites. And not just because I used to work for Ford as a statistician back in the early 90s. It's been a very long time. Great company, too. Great management team. But because it's kind of like an early cycle electric vehicle play with the Lightning F-150 and the new Mustang and all the rest of it coming out. It's not Tesla. It'll probably beat Tesla, in my humble opinion. Ford's a great company, so very well managed, very intelligent people. And if you look at the 1-year chart, I mean, let's just take a look here. Tick-tock. So that's the 1-year chart of Ford. It's doubled over this year. Looks good for a consolidation breakout over the 22. Other great charts include Pfizer. I've been mentioning it to you folks since 50, right? I've been calling it along since 51 or so, right? 51, 50, 52. I'm going to wait for Pfizer to get over 62. But this could easily run up to 100, right? So, or not, we'll see. But it's been quite the journey so far. And because of their pivotal role in the ongoing pandemic that's not going to go away anytime soon, it looks like, unfortunately, Pfizer is well positioned to capitalize on that, in addition to Moderna and other pharmaceutical and healthcare. FCX is starting to light up. Freeport McMoRan, that's a reopening play. So if they need copper, which they do, and China takes a lot of copper too. So between the U.S. infrastructure bill and China, I'm sure the copper sector will do, and FCX is my favorite play there. So that's it for the swing trading charts. Ford Motor Company looks fantastic, as well as the others. Now let's switch our attention over to intraday charts. Story stock of the day yesterday was NTRB, and that's one of my traders, Mick, had mentioned. Really good play, right? We called the long, I think it was 740. It got halted shortly thereafter, then opened up near 8. Ran all the way to 12 before a pullback. This is the kind of chart that we cover in our live trading room at Trading the Open. I don't like the low float cheap stocks because those are artificially pumped and dumped by bad people out there running chat rooms. So we don't want those. We want high volume, high volatility charts that have relatively consistent runs like this. So, NTRB was good. Other charts to look at, let's see. 2Jan2022, 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 2 SOFI. This was a beautiful chart on Thursday. Not so much yesterday, but look at the range on, this is a 2-day chart. Look at the range in SOFI. I've been doing a lot of broadcasting lately. All the way from 14.6 up to 16. NEO was also great. This was our best chart pick of the day. And I found this one late for my members. I was a little late to the party. I said, we go long if it breaks 30.20. So it had already run up from the 28 to the 30. I said, it's still going up. Let's go long over 30.20. It ran up another couple of points all the way up to 32.80, almost 33. And this chart illustrates my whole number concept. You may have seen my article in Stocks and Commodities magazine on that. It ran into resistance at 33. So when it ran into resistance right over the 30, so I said, let's go long at 30.20, and it ran up a good 1.5 or 2 from there. When something runs up near a whole number, that's a good place to tighten in a trailing stop. So NEO's a good one to keep on the radar for next week. Typically, the shoulder days, the Fridays and Mondays, tend to be lower volatility than the midweek, Tuesday, Wednesday, Thursdays. It's another interesting dynamic of trading the market. So I don't expect much out of this chart on Monday, but Tuesday and maybe Wednesday, this may light up. So keep an eye on NIO. Now, I tried shorting Carnival yesterday, unsuccessfully. I got the short off, I think it was like, where was it? I think it was, I don't remember offhand. I do dozens of trades a day, so up to 105 or so. I shorted down there and then got cover stopped out. I think it was a 16. So I was thinking Carnival Cruise Lines might be a short, and I still believe that, so I'm going to look for shorting this next week because the CDC said, don't go on cruise ships because of the virus. So I thought surely that would have a big impact on the stock price. It really didn't, a little bit from 20.5 to 20.10, but nothing significant. If it gets under 20, I'm going to short Carnival. That's what I told my traders. So CCL might be a short next week for a day trade or a sequence of day trades like I trade. XARS was a gapper that didn't go too far. The single best chart of the week is this NEO chart. And it has two characteristics that I like. Two features that I like in the Thursday chart. It's got a very wide range, number one. Range is really critically important. It's not, yesterday was a really terrible range, right? NEO just ran 31.4 to 33 or so. Just a really tiny microscopic range compared to the huge range that we saw in this instrument on Thursday. Now the Thursday range was all the way from 28 to 33, so a $5 range. Again, we don't expect to buy the bottom and sell the top. We nailed like a 1.5 or 2 in the middle. If you get a chunk of the middle run and a nice wide range chart, that's what we're after. So I called along at 30.20 and out near the 32. So we didn't get the exact top running up to the 33. We didn't get the first part of the run down near 28, but we got the all-important middle third of the chart, and that's what to look for. So it's got a wide range, and it's a clean, tight focus chart. It doesn't have a lot of chop and drop. So that's another key feature for your charts is make sure that you trade charts that are easy to trade because you want to scale in or double down. It's like you're playing blackjack, and you've got an 8-3, and the dealer's got a 5. You would double on that. You would quadruple if you could, right? Or you've got, well, anyway, that's a good example. Or your poker in your late position with you flop a set and you hit the boat on the river. You put the opponent on a so you've got the full house, you got the boat. The opponent has, let's say you put them on a flush, right? They hit their flush, yay! So they shove. You shove back with the full house, and you take all their chips and make them cry. Anyway, you want to put the odds in your favor by selectively trading the best types of charts out there, and those are the kind I cover in the room. Ones that have big ranges with specific entries and real-time entry and exit calls with the help of our members. I had so many new people join, and thank you if you're one of my new members. I had so many people join this last week or two. It's been quite overwhelming. They're just going to ask too, because I'm a one-man band and I'm getting older here, the passage of time. I do ask for your patience if you need help with customer service. It may take me a day or even 2 to get around to something. So if you do have a customer service, I try to get to it immediately, but be a little patient. So Good point about the volume, right? Oh, thanks, Sally. Happy New Year to you, too. Good to hear. All right. What else do we have? I don't think I have too much else for you today. I think we're going to wrap early unless there's any questions. Does anyone have any swing trading charts you'd like me to pull up? I'll do my best to see, first of all, if I would trade it. Let's look at the 3-month. Is the thing worth trading in the first place? Does it have a ticker like that? Now, personally, I don't like things that are this expensive. I prefer trading things that are under 50 or 60 a share, and preferably down to 15, 20 a share, because you can get more shares and you can trade more instruments. So that's good. Let's see. AUPH. Gold's been up and down. Gold's been one of those inconsistent commodities. What has done good was my KOLD inverse natural gas call. I told that to you guys around 6.5, 7 a share a few weeks back, and it's since nearly doubled, so that was good. Let's see, trader asking about AUPH. No, that's a horrible chart. Any other charts? Let's see, GDX. We're asking about gold, so I'll pull up GDX. I'm assuming AUPH is a gold stock or whatever because it's got the similar chart pattern to our gold GDX. Another terrible chart. It did hammer out a bottom there with a hammer near 30 down to 28.8, but there's not much upside. The risk reward isn't good. If you buy 32, it may go to 34, but you'd have to risk a dollar or two to swing trade it, so not worth it. Well, that's a good one. Costco had been good until a pullback earlier. It's very expensive, so I don't trade things that are $500 a share. But that's a good steady uptrending chart. If you look at the 1-year chart, it looks even more impressive. But COST, the reason you want steady uptrenders is because you always want to scale in incrementally. You don't have to double your position. You know, if I start off with, what I will do is I will double on the front end, and then I incrementally trade on the back end. So I might start off with as little as 50 or 100 shares, double down once or twice. I'm in, say, 300 to 500 shares. And then if it keeps going up, I'll incrementally add just 100 shares at a time. Does that make sense? You start small, snowball up, and then the further it runs up, you still incrementally add, but smaller size up in new highs because it's kind of like a bell-shaped curve. It is a bell-shaped curve type approach. You start off small like the left tail, you scale in as price goes up, and then the further it goes up, you still scale in, but like the right side of a normal distribution chart, it's a smaller share size. Let's see, trader's asking about Marathon. We cover, Mara is my favorite Bitcoin play, but that's more good for intraday than swings this past few weeks. Let's see. Marathon, it looks like a short at 28, right? Is it a long? Nah, maybe if it recovers at least 40. If it gets back over that decade value 40, I may take a shot at it myself because it had been up at 80 and it got cut in half. But it still looks like a terrible head and shoulders type pattern with the neckline down to 30. So this would be a short, again, not a trade recommendation, but I'd be looking to short this under 28 or buy it over 40, somewhere over 40. So right above 40 for long or right under 28 for a short. Let's see, AMD semiconductor. So this is a no-go right now. AMD's, it's been chopping around all of December, so it had a great uptrend until December 1st, right? Then it pulled back and chopped around. If it does march higher north of 165, which it might do late for first quarter next year, or this year, I should say, but it's not in motion here, so It's pulling back off an earlier high. It'd be a short under the 130 or long over the 165 is what I would trade. In general, I just like charts like this that are going up. Call me silly, but I like charts that are going up, indicating that people are buying them. I don't like guessing and gambling at charts that are chopping around. The other plays are inverse plays. I'm going to be trading things like SPXS, SDS, SPXU, and the Russell inverse, TWM, because I have not traded those in the last 30 days. So I don't have any watch sell constraints on those. If the market sells off, things like UVXY or VXX are certainly a lead, or I'm likely looking at VIXY because I haven't traded in the last 30 days. But anyway, if the market sells off, which is a distinct possibility, given the configuration, we have a bearish rollover in the S&P, right? Bearish overhang up there. 3 out of the last 4 days in the stock market were red. Dun 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 bum. Alex, tell them what they won. So because we have flat candles and a pullback after an uptrend, and we have all this virus concern and inflation and high taxes and politics in Washington and all that crap, market may well pull back. So if it does, inverse is the way to play, and I'll be teaching how to do that as I do daily in our live room. All right, well, I'm going to go ahead and take off for now. I'm going to go spend some time with my family. It's New Year's Day, and I wanted to thank you all for being part of my family here, my trading family, for showing up here this morning, and I appreciate it. If you want to join me this upcoming month ahead, and I'm not going to repeat this at all this year. I only do this offer once every 2 or 3 years. So if you want to get a whole month with me in the live room without worrying about canceling a subscription or any of that, it's a non-subscription rollover trial. It's just $97 for the whole month of January. So you can join me 5 days a week, starting at 8:30 in the morning East Coast time if you want. I'm there from 8:30 till 11, and usually 3:30 to 4 every single trading day, Monday through Friday. So Trading the Open Live Room, I give specific alerts. I'm trading daily myself, and I tell you guys what I'm trading, so, and show you P&L if you want. So I think that's it. Hey, Sally. I think I'm going to wrap up. Okay. Well, we've had a good week. Yeah, Walmart's probably good along with Costco, and any of the big box retailers that are in uptrends are likely still good plays, particularly as coronavirus plays. Any of the big box retailers. I like Costco, but likely Walmart and some of the other big boxes are good as well. All right, we all have been great. Thank you for being here. I appreciate it, and I will see you in the upcoming session in the week ahead.